please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, Indian investors have been having not a tryst, but a very deep romance with equity markets for the last 24 months. We thought the SIP culture is ingrained. Month after month, we saw higher and higher flows into equities. So this sudden jolt to this relationship that has come over the last 1 week has left everyone a little stunned. It originated in the United States. So Sam Polyak, first question to you. How would you describe the 4.5% correction in a single day, or the 8% correction from recent highs? Is this just a letting off affair, or is this the start of a deeper correction?
It's a great question. I strongly believe that markets can't go straight up without any volatility forever. And so what we've had over the last week or so is just kind of getting back to normalized levels. Stocks are still up a lot over the past year. I still see the prospects for equity markets and emerging markets in particular as being quite good for a fair amount of time. This correction is healthy. There's nothing that I see globally or in the US that would make me think that fundamentals have changed that much in 1 week. So I wouldn't really worry about it, and if the correction continues, I'd see it as a pretty good buying opportunity.
Well, gentlemen, if you have any worries about the equity markets in the US, you're free to ask Sam or each other, but I just want to persist a little more, Sam. The questions about a little bit of correction is countered by people who say that valuations have never been so rich, that to get to even normal valuations, even a 25% fall will be par for the course, and only then we will come anywhere close to historical valuations. Is that right?
Well, it depends on how you look at valuations. A lot of people talk about the CAPE ratio, which normalizes margins. I believe the margins are higher and higher structurally. And so because of that, you have to look at multiples that are in the high teens, which are expensive. But at the same time, they're going to be getting a nice benefit. One, because the multinationals in the US have a global book of business. And that book of business is much improved because of a recovery in places like India and places like Brazil, places like Europe. So that's improving. You're getting that extra benefit from taxes that are coming down. So you're actually going to have earnings growth, accelerating earnings growth this year, which I think is part of the reason why the equity markets had done so well going into this correction. I don't believe those are going away. And so as part of that, I think overall the US markets are very healthy. Global markets are healthy.
No, are you saying that historical valuation, 12-month trailing valuations may be unrealistic, but forward valuations in the US are normal?
Correct. Because earnings growth is going to, in my opinion, is going to surprise to the upside.
Okay. Well, Navneet, you would be willingly tracking global markets as well. Is that the received wisdom for you from your sources and your own analysis, that 8%, maybe 10, but the growth story is intact, and therefore the financial markets will be able to weather the storm?
So of course the global economy is seeing a synchronized growth momentum. Profit cycle has been pretty good. In fact, MSCI World, if I remember the number correctly, is likely to, the expected earnings growth this year is 14% on a high base. And my view is that corporate profits as a percentage of GDP are already at an all-time high. If the global economy, let's say even the real GDP, even if you add the inflation, and the corporate profits again are likely to grow at 14%, almost double the nominal GDP growth of the world, at some point in time that's likely to create some political trouble somewhere. Of course, the Trump's tax reforms, the regulatory reforms, which I believe will be followed by several other countries, will also make the picture look quite interesting and quite good for the year or two. But at some point in time, I think there should be some pressure on that, simply because You can't have an economy where the corporates are grabbing a larger and larger share of the pie. At some point in time, it's going to create a problem. And I think whether the fiscal policies or the political agenda may start shifting a little bit. So that's one of the concerns I have.
Inequality as a concern.
That we have been in a world which has been quite growth starved, it has been quite yield hungry. Now, if the yields go up, which are likely to, simply because we are seeing this inflation trade, inflation is going up. So far, it's been a great story. I mean, you had the growth coming back, but inflation not rearing its ugly head so far. But the initial signs are that the hourly wages, etc., have started rising. And at that point in time, if yields also start rising, then the relative attractiveness of most of the other asset classes also get impacted.
What are the chances, Sam, that inflation rises very quickly? At the moment, the markets are not even entirely factoring, the Fed fund futures or such other derivatives are not even entirely factoring in 3 rate hikes. There are people who are freely talking of 4 rate hikes. So will that be a source of instability?
Well, it depends on why rates are going up. I think the rates are going up because we have good prospects for growth. One of the biggest positives that I believe we've seen over the last 6 to 12 months is, for the first time since the global financial crisis, we genuinely see the output gap closing globally, not just in the US, but globally. The fact that you have wage hikes in the US at the lower end of the income spectrum is actually quite good. It's good in terms of political stability. It's good in terms of consumption, which we haven't really had a broad-based consumption for quite a while.
So you don't agree with the inequality thesis so much? You think this is in fact a bottom of the pyramid growth?
I think right now it is. Whether it will sustain is another question, because you do have the structural issue of automation, which is impacting the bottom of the pyramid, but automation takes a while to play out. And so in the meantime, you really have the higher wages. Walmart's announced $10 minimum wage. You've had other companies go to 15, and so and states are looking to mandate that. So that should really help the lower income.
Okay. Well, the Ruchir Sharma thesis has been that the 4% growth is not possible because the labor force itself is shrunk. If you're going to compare it to the post-war baby boom generation, you had people then. Now you don't have that many people, so generating 4% is not going to be possible. You have any view on that?
I think it's a great point. I mean, this is one of the biggest positives for India, is because India has the demographic benefit that's coming through. U.S. had that benefit because of immigration. Okay. And I think because of that, we're not in the same position as countries like Italy or Germany or Japan, which have a shrinking population. Our population is not shrinking. We do have some structural headwinds, but I think they're being addressed, and we're adjusting to it.
All right. So Sam's thesis is very clear. I asked him repeatedly only to check out whether he sees headwinds to the U.S. growth, but no. Navneet, I think, is not that sure that global instability will not come our way.
No, I think this is like one of the best period you are living in last couple of years. The global growth momentum is pretty strong. I'm quite positive on capex cycle returning globally. I mean, capacities are hitting everywhere. I think shareholders are going to put a lot more pressure on corporates to stay away from the buybacks and dividends that they have done over the last few years, but to actually invest more in the new capacities and improving the productivity. So from that perspective, it's going to be good. But I just keep thinking from a very macro perspective, more from a political perspective, that if increasingly, which has been the case for last several years, even when the growth has been quite muted, a larger and larger pie has gone to the corporate sector, will it create some political challenge? And how it will ultimately unfold in what manner? So this is not a view on like next few quarters going to slow down. In fact, the corporate profits as a percentage of GDP, based on this quarter and what's expected, will hit an all-time high. It's like almost reaching 11% of GDP in US, substantially higher than long-term average. And it's, by the way, quite in contrast with India, where we are hitting the all-time low as a percentage of GDP. So something is really different about India.
Okay, we'll just come to the India. Since you brought it nicely to the Indian context, Manish, let me come to the Indian context. the US crash, or sorry, pullback, coincided with the aftermath of the Indian budget. So what's your sense about the Indian market itself? You can make a very strong case that even the Indian markets were overvalued. So is this a start, therefore, of a slightly deeper correction here?
I think valuation is one part, but from a business cycle perspective, I'm more comfortable with the Indian economy rather than the US economy, because I think clearly US has more signs of late cycle than the Indian economy, because the Indian economy, along with most emerging markets, I think bottomed out in Feb 2016. And if we probably did not have GST, Demon, RERA, we probably would have had a much better growth year in 2017. But I think along with all emerging markets, we're going through a revival in growth, which is only 2 years old. US has been in a growth cycle for almost 9 years. It's one of the longest expansionary periods they've had. So from a business cycle perspective, which to my personal experience is more important than valuations, I'm more comfortable investing in Indian stock market than, I don't invest in US stock market, but if I were allowed, I would pick India over US at this point of time.
What about the near-term problems for India? In the sense, do you expect this 16,000 crore, 20,000 crore of retail money to continue now? There is one, long-term capital gains, and two, yields hitting 7.8. Okay, today it's more like 7.6 on the 10-year, making debt attractive. So will the markets grow, but not with the ferocity and the linearity that we saw in 2017?
So one is that when you look at yields going up, crude going up, I think you have to also look at the mirror image that all this is happening because growth is coming back. So if your EPS growth picks up, then these are manageable hindrances to the, we'll obviously climb a wall of worry in a bull market. But having said that, I think even in a long bull market, it's not that every 6 months is good. So if sometimes the markets do run ahead, we've just seen it, some froth comes out, we probably will have a flattish 3 months.
1 minute. Are yields growing up only because of growth? Would they not be going up because the government is borrowing more than it should borrow? Would it not be growing up because there is a cost push inflation we expect in food and crops?
No, but Latha, the point is that if crude were at 40, you wouldn't have these yields, right? Crude is at 65 because of global growth to a large extent. So
you don't see yields as disturbing the picture at all. One, because the discounting, Indian inflation, if it doesn't behave, if even the delta is not lower but higher, which I think is, I mean, the Reserve Bank's forecast, at least for calendar 2018, is 5.5, 5 to 5.5. So the delta is already higher as far as inflation is concerned.
But every bull market has rising bond yields, so it's a characteristic of a bull market. Okay,
so you wouldn't worry that the retail flows or the valuation could get challenged in 2018 more than in 2007?
So as I said, sometimes the market runs ahead, but let's say in a 3-year block, we get a nifty earnings growth of 50, 60%. I think we'll have a decent market because even if PE drops 10, 15%, it's still probably the best major asset class for a lot of people.
Okay. So you have not seen already any investor shift in preferences?
Not right now.
Okay. Vishal, well, since you're not in the business of having to, daily convince investors about one asset class or the other, I assume, you'd only convince yourself.
I have other problems, but it's okay.
Okay. We are going to present another problem to you. Do you think the Indian story looks from now to the next 15 months as smooth as it looked in the last 3 years? My main problem being we have a budget that was clearly populist, that had some seeds of a cost push inflation, which we don't know. We don't know the details of the MSP, which clearly had a fiscal deficit number which can be challenged as an overestimation of revenues and under provision of expenditure. And we will have an election in 15 months. Given this combination, have we already seen the highs, or do you think the growth story is enough to pull us along?
So, two questions. So first, the last 3 years have been terrific. So to claim that the next 15 months would be as smooth as the last 3 years, it's possible, but not something that I would bet on. That doesn't mean that I don't think the growth potential here is there. I mean, we're obviously big believers in India at Warburg Pincus. We've invested a ton of money last year, over $1 billion of invested and committed capital into the country. And I think it's early innings. So if you actually look around the globe, which we do being a global fund, I wouldn't trade our set of cards in India for anyone else's. I mean, you're still early in the growth process. You've got sectors, you've got technology, you've got a stable government. I know elections are coming up, but really when you compare it to some of the other places around the world, we in India always complain about government, regulation, things, and my friends in other countries tell me, you should be lucky. You should be happy.
Our best macro in the last 3 years or 4 years has been political stability.
And so...
and precisely because in the next 15 months, we will all be wondering, will this continue?
Yes.
Will that put a floor, put a ceiling to valuations, not so much earnings?
I think it's possible. Anytime you're coming up, the markets don't like uncertainty and they don't like risk. Could there be a pause? Potentially, but I don't think it has anything to do with any fundamental factors, because when we look across our portfolio and we look at our companies, growth is good. I wouldn't say it's great, but it's good. I don't see any big worrying signs. There are all the factors you pointed out. There are small issues that will continue to crop up, but there's no big sign that I can point to that says, oh my gosh, I'm really, really worried there's a crash coming. Now, having said that, it could always come. We've been around many cycles before. But we remain pretty optimistic. If you take whether it's 15 months or 5 years, I think timing is always difficult, but the growth potential remains fantastic.
What kind of a downside possible in this market? It just soothes nerves, and that's why this question. I mean,
I'll pass that. I really can't take a shot at short-term downside.
Vishal?
I don't think there's much downside, to be honest, because I actually come from the view that I think people and investors, like Sam pointed out, one of the reasons flows haven't come in is because people are worried about where valuations are. So unless you have some black swan event, which, we're right, no one can predict,
yes.
Okay? But in a normal world, if there is some crack in the market, even a bit, there are buyers waiting because the story is good. The fundamentals are good. That's my view.
No, I mean, I would think so. At the first dip, people would put more money. As Sam has been saying, it's a hated bull market, at least in the United States. What would your guess be, Vishal? Do you think, I mean, Vikas, do you think we can get away with a minor fall only this year? Because of all the factors that will have underlined.
So again, difficult to predict, again, unless there is a major, some macro, which is, black swan event, as Vishal was saying. I mean, we will be around 580 to 600 kind of nifty, EPS. And I would assume that at, 16 to 18 kind of PE range, which is like roughly about 10,000 of nifty, there will be enough and more buyer given the kind of growth ahead of us.
Better.
So I think probably somewhere there will be a lot of money in case suppose the market falls. I doubt I'll be, that market would really fall below that, but, markets are always difficult to predict.
No, I'm only asking you for what can be a reasonable fall. We have to exclude black swan events, of course. So a max of another 5, and you would think 4-figure nifty is unlikely, Vikas? A 4-figure nifty is not something that would be your base case.
Possible, it can happen, but I would assume that that is where lots of money will come in and start getting invested. And, on a given day, on a given particular week, market can go to any level. It's difficult to predict.
Fair point. Fair point.
So Latha is likely to get a big bonus check next month. And she's asking, should I invest? You're going to get a large bonus check, it seems. I want to make sure whether to invest now or wait for when the Nifty is in 4 digits. You've been trying hard to get that confirmation. Am I going to see Nifty in 4 digits, isn't it? But on a more Serious note, I completely agree with you that I think investors have forgotten volatility. And this is a beast that we have to live with this year. This is my strong view. I think markets have been extraordinarily calm globally, and any kind of risk at any point in time on the horizon, whether it's towards the missile firing in North Korea or early morning daily tweets by Trump or whatever, that did not make any difference any time. I mean, in terms of the stability in the market, I think we are going to see higher volatility. That's a strong view I have. But from the investor's perspective, if the soothing the nerves, I think for the next couple of years, the micro looks interesting. I think India had an extraordinary macro. That at the margin, probably you may not see incremental improvement there. Probably you see a little bit of deterioration. But from a micro story, I think purely bottom-up looks very interesting next couple of years. But those returns are not going to be like coming in that linear fashion where every year you will have what we saw in mid and small cap last year. There are several pockets where there is a bit of froth, and that needs to get corrected. We have seen a lot of that correction happening in the last couple of weeks, and I think that trend will see for some more time. So brace for volatility, but remain prepared to put money on dips.
Okay. No, honestly, my effort was not to ask, to trap anybody into a number. Okay, let me put it this way, Vikas. 8% is a pullback, 10% is a correction, 20% is a bear market. What is the most likely scenario, if you want to put it that way? What's in store for India in 2018?
Save for any unforeseen circumstances, I think India will do well.
All right.
Put money in my fund, you'll make money.
Come again?
Put money in my funds and don't worry for 5 years.
Well, I think that deserves an all-round cheer. Sam, Navneet, Vishal, Vikas, and Manish, thank you very much for a very engaging conversation.